In this session, we are going to try and decode what the market is showing us, because some information is like we are completely going bearish, the stock market is about to crash. That's the narrative. On the other side, you have people giving you a different opinion, which is exactly the opposite, showing we are going for the all-time highs. So what is it going to be? Because it's just not what they say you digest. It's like, okay, you sit there, you listen to that, and then you look around and see, okay, what really is happening. Now, you do have to take these into account, because it's not just in one segment or one sector which he's selling. It's industrials, it's energy, it's IT, it's healthcare. It's a big chunk. So when they keep the industrials there and dump energy, IT, healthcare, all the others, you need to ask that question like, okay, what is going on his mind? So right now, if you are there and if you're an XRP holder, you're looking at the market, okay, the market is getting a little bit of red day right now. But again, the week has been mixed, right? This entire week is mixed. We've been seeing up and down motions in a lot of assets. Say some of them doing fine, some of them doing bad. But if you take even a step back and look at this, things are looking really good. Fine. Now, if you're actually a XRP guy like me, looking at the market and you're asking the question, okay, most of the assets are moving up, down, but at least trending higher. XRP is still there without doing much, and you're like, okay, this is really hard to observe for an asset like this with this level of fundamentals, and it's not moving much. So from the charts, you get a little bit of different idea looking at the market. But the fundamentals does suggest you somewhat different. Now, for XRP, the SEC case is the hardest part right now. You really know that it is not a security, but what these guys think is the important point right now. Now, yes, the court is going through the documents. They're trying to come out of this, but you and me need to look like, okay, what is the rule? How do they interpret the stuff? And whether it's going to be a security, does that have a chance in their eyes? Because at the end of the day, it really doesn't actually matter what you think or I think. Because say, for example, I'm not a big fan of this network, where they went through multiple network outages in maybe last just 1 year. And if you followed my Patreon links, I've been calling, okay, that can drop heavily. And we did drop heavily. So, you think it's not good, but the market is like, okay, we are going for it. Now, at that point, you can slowly start thinking like, okay, what does the market see there? If they are going in, the money is going to move in there. So the price can go high. Now, I'm not saying go buy this stuff. I'm saying this is the way the market works. So you need to generally look at the market and decide before you go on. Now, let's first look at these two guys and try to understand what they are trying to give us in a narrative and try to decode what's the real information from that. Welcome to the Scientific Investor family, where we discuss crypto and the science behind investing regularly. Now, among the assets which have moved well, there are assets which are moving right now, hitting your targets, moving up, down, doing all those stuff. One of which is Chiliz. So if you are looking at this chart, this goes all the way back to June 30th this year. And I was kind of trying to highlight, okay, you are right now slowly making a bullish divergence. Then followed by that on July the 19th, I put this one out saying, okay, this is a breakout. So here you see that the RSI is breaking. Now, yeah, have patience. Without that, you're not going to go through your targets, because it was July the 19th and now it's July 15th. And you see it's breaking higher, hit our first target. Now it's somewhere in between. So if you wait there, you already doubled your money. 1. 2, now you know the targets. So if you're entering now, yes, you don't have that much upside, but yeah, you still have room to the upside. But if you entered here, say 100%. Now we're taking 30, 30, 40. You are averaging to the upside. So even if it's like 5x, you kind of make 3.5 because no one knows what the market is going to bring you. And right now, if you're looking at that, you have a breakout here. So you do see that the market came here, hit our level of first target, and then we are breaking to the upside. Now, this is not just one random asset doing this. This is the language of technical analysis, right? Look at the RSI. It kind of gives you a story. Broke higher, came back, retested and bounced. So it's not bad. If you are sitting there trying to make sense of things, you kind of get the ability to understand, okay, this is something which is happening right then and there. Now, if you are looking at the market, this is Ether. We know that market is now about this level of support and resistance. And we've talked about this when we were below this. We were trying to break through this and slowing down in between. Because, there's a lot of negative talk and short-term charts does suggest that you can have volatility. That's for sure. In this market, you're going to get a lot of volatility. But the question is, this level has been breached. Now you're above this. Great. So you broke higher. Usually, after you break higher, what happens? You come low, you retest that and bounce. Now again, that question goes back to like, how low can we go? Maybe 1700, maybe 1800, no one knows. But is that going to kill your portfolio? No. Most likely, you have dry powder and that's going to give you ability to buy more. That's why I always say, keep your dry powder. Don't just put everything into the market. Don't just shoot all the bullets because it does not help you. When you're looking at the macro, you kind of look at the trend and you're seeing like, okay, this broke higher. Maybe you're going to come back, retest and bounce, and that's what you're looking. So with that bounce, the entire market is going to bounce. When Ether is going to do this, you're going to observe a lot of coins in this market doing upside. Now, these are something like, once in a while, and the entire volume is like this. So who makes money? No one. After the asset goes this much up, there is no sell, there is no buy. This is the daily volume. So you need to be aware of where to enter, where to exit, because you may actually enter there and you may see like a 60x going up, but there is no volume, there is no liquidity. You can't take your money out. So you'll sit there watching that come all the way back down. So if you want that, you can literally go on to these kind of stuff. Otherwise, you take informed, well-educated decision to understand where you should be entering, where you are taking your profits and all. And that's what we actually do regularly like this. So for these, you can look at the Patreon. The link is in the description below. Now, in the general market, as we just talked, yes, right now you get the narrative like this. People are selling. And who's that? That's Burry. So, Dr. Burry actually does these stuff and it kind of get a little bit more attention. I would say like, okay, this guy did that last time and he made a name for himself and a lot of money. Right now, he was talking about inflation increasing. He was talking about, all this stuff which is happening right now 2 years back. And even Elon Musk went up to call him like a broken clock, which now proves to be wrong because in investment world, getting information a little bit early works always. You have time to prepare a year or two for this kind of downturn in the market. That's really good. If you knew that kind of idea and you stick to that for a long time, it works. But on the other side of this, you can't completely neglect what's happening. As the inflation is going down, you have a proper job market right now at least, and Fed may not actually have to go kick the stuff to actually get the inflation to the downside. Now, I don't want YouTube to go, cut my video. That's why I just stay there. So now you actually get the point. Central banks are trying to push the inflation to the downside by hiking the interest rates. So if the interest rates are already up, inflation is slowing down, they may not have to go kick the market. Fine. That means the market gets some room to go to the upside. Now, one of the key stuff for crypto market here is the merge of ether right now. Because if you are looking at that market, you also see like, okay, September is going to be the time where they're going to actually say this. So that's like September 15th. So by that time, if you break this one, that's great. If not, that's going to be a resistance. If you have trades, do take your profits. But if you are already breaking above that, it will be a retest and a bounce that can still go test your all-time highs. So if you're in the market right now, I would actually say like, okay, for crypto market, I would say that we are going to see the all-time highs, or at least test the previous all-time highs. But I'm not saying Burry is wrong. I'm kind of completely agreeing with this guy. But the difference is, say you look at Japanese economy. Now you can decide for yourself, go check the debt to GDP ratio for that country and all that. It doesn't actually look really bullish for me at least. But it doesn't care. If the central bank is printing money and buying stocks, they have a lot of money and they can print until the ink goes off, right? So that means the stock market is going to have the corrective wave, agreed, but it's going to still keep going higher. So if that's what we are looking at right now, then okay, if the central banks are going to come out and push more money in the economy, which they are doing, they're going to do. I just saw like, one of the central banks just started easing because they went in too hot. They pushed the interest rate to the upside too much. And now it's time for slowdown. So if the same is going to happen with other central banks, no one knows. But there is a probability if the economy collapses. So if you take these into account and you're like, okay, in this asset class, you do see like these assets. And then you're like, okay, personally, you are looking at these assets and saying, okay, they are going to do wonders. Fine. But overall, it's about the market, right? When the market goes for something, it goes straight. So right now, if you are looking at this asset and saying, okay, I didn't get much of a money, I bought at all-time high, fine. But if you are looking at this on a proper time horizon, now you know how it actually changes. 1.5 million to 290 million. Yes, even if that's in millions, it's like that. But you can understand that. If you put 1.5K, you get 290K. That was a huge change in 5 years. Because unless you're going to do magics, you're not going to actually get that. So long-term investments actually work. And even though that's happening on the one side for Ether, on the other side, I kind of agree with Peter here. I don't actually think the delay being caused from the SEC for XRP is for any useful purpose. It is just to give these guys time to make their broken system to be something a little bit better. They talk about being a payment asset, payment platform, where the fee is like 0.002. But right now, go to one of these projects and try using that. Say, for example, if you have node project, if you have strong block, go to that, try paying your fees. Right? You're paying the fee for the node maintenance fee, and then you see the gas fee. I did that last day and it was like $3.5. And I'm like, this is so bad. Right? You're paying the fee $14 and then that's for the strong block, and then the gas fee is like 3.5. That's not really great. When you have options like XRP, XLM, you name it, XDC and others, where your payment fee is near to zero, that's what you're talking about. But again, you look at the general market and see like, okay, where the market is headed. You go to the market, if you want to look at the volume, great. You just go look at the volume and you do get that point like where the market is going. Whether you feel ETC is worth this volume or not, market think it is. So as the general trend goes up, when it breaks higher, that's when you try to go in. So as we've just talked here, this is the medium term trend. You've been below this for a long time and now you're breaking that with strong candle. So bulls are really active there. And this kind of shows me that the altcoins are actually going for a ride. Because if you're going to look at different coins in the same scenario and you're asking that same question, are we having a bearish rally? Are we going to go for a big major correction, you know, you can't say no to anything in this market because it can do anything, but you're looking for the odds, the probability. And when you see these kind of assets breaking through their medium to long term resistance, it kind of gives you some idea, like 500, 450 days of resistance broken to the upside, you retested, you bounced. So it kind of validated that level. Now what you're looking at is like, okay, short term, I'm going in, looking at this previous resistance, turning in as a support. So if that is true, what you are looking at is a rounded bottom which broke higher. Now most likely it may make a cup and handle pattern and go to the upside. But if you look at Ether on short term, maybe a 12-hour chart for Ether can actually give you a bit more clarity for the short term structure where it doesn't look good. I agree. But that again is on a short term category, right? This goes in as a rising wedge, which is bearish. But what if that breaks back to the upside? Now, a bearish pattern breaking bullish is ultra bullish, fine. But the pattern is bearish, and you can say like, okay, there is a possibility like this support, previous one, which turned into resistance here, can be tested. Now, you should ask this question to yourself. Market moving to test this range, will that completely hurt your portfolio? Now, to put that into perspective, what you can do is just measure 10%. Fine. That 10% move in any asset, in crypto precisely, will that change the way you are looking at the market? So putting that into perspective, XRP, if that drops like that, XRP is going to come somewhere close to 0.34, 0.33. If your buy is below that, and if the current price itself doesn't care much for you, then it doesn't actually feel like it's going to hurt you. Now, if you are in the market, you are trading short term, it may hurt you. Because if you don't understand these fluctuations are going to come, because a lot of people say, okay, oh, it dropped 27% a day, but it's up 50% for the last week, right? So you are going into this one, you're going to look at this, and you do understand like, okay, that particular asset is down today 27%, but for last 1 month, it's still up to 75%. That's how you look at the market. You give more time instead of trying to time the market, and you get more winning. But yes, I agree that you look at these, and if you have an idea and you have dry powder, you want to buy more, now you can wait to see whether this breaks to the downside. Because if it breaks to the downside, 10% down, great. You get to buy a little bit lower. But if it breaks to the upside after bouncing from here, that may not be a good case. Fine, but still having the dry powder enable you to be stress-free without closing other positions running here and there, but always being prepared. So in this market, whether you are a pro or someone starting new, it is always needed to look through the macro to understand what's happening. Because right now, when we see all these bearish cases being pushed in the general market, you see this one happening. Now, one of the reasons is like people go for Bitcoin and Ether, institutions. But when you actually look at this, say for example, Ether future is at an all-time high for the demand of this. I'm like, that's 8-month high, which shows like there's a lot changing. Because in this one, if you're going to actually draw a trend line, say for example, you're going to actually take in this image, you're going to go drop, try. Okay, this is going to be the easiest way. If you try to put a line here to see, okay, that's not the right color to choose actually. So if you're actually going to try and put things into perspective, now you will be asking that question to yourself like, okay, what can I look for? This resistance is what you are looking for. You broke that one, which is the key level there. You broke this range, you came back, you retested that and bounced. So that is showing you a new trend. Now, if you are a pattern guy, you're most likely looking at this. Fine, that's a falling wedge, which is a bullish pattern that broke to the upside, no surprise. Fine. So you can really use the ability of that language, technical analysis, and bring that into life. But if you are entering into a rug pull, your TA may not help you. So that's why I always say combine the fundamentals and technicals together, because you really can see bullish structure in a project, which as soon as it breaks higher, a lot of money enters and rug is pulled. So you don't want to be in that scenario. One of the straight reasons for that is as the market goes up, you can have a lot of these happening. But being a long-term guy, you should be looking at this, right? If you, me, or anyone here in this market are serious about investing, you are literally looking at one of these. The Fed opens pathway for crypto banks to tap central bank system. So they are now trying to connect these. Why is that happening? Crypto is just $1 trillion market compared to all the other asset class. And they are opening the gateway slowly. And that gateway can literally bring tons and tons of money into this market, and it's going to be institutional for sure. And retailers will struggle because when the institutions increases their purchases, there's a lot of manipulation. So if you are in the market as a long-term investor and you know the fundamentals of that particular asset, that's great. If not, you should understand technicals, or at least on a daily basis, you put time, you learn what these charts suggest you. Because when you're on a macro scale, now you don't actually say, okay, I'm going bearish, I'm going this and that. Right now, what you're looking at is that the price is flirting with the 20-day moving average, which is usually considered as one of the key area. If you break that to the upside, retest and bounce, that kind of gives you the understanding like, okay, that means we are increasingly bullish. Now on a weekly, when you're looking at the same trend lines, you are now close here. Now, being conservative, you can kind of stay here, where if you zoom in, you will actually understand like, okay, we just broke higher, but we are still there. We haven't actually gathered momentum after that. But, being frank, we are at the verge of a breakout on a macro scale. So that most likely can actually give more momentum here in the price. The MACD has already crossed. The volume is to the upside here. Now the MACD needs to slowly grind back to the upside. So if you are plotting that trend line here, you can get something like this, which again is slowly trying to break higher. Now, if you sum that up, you may have short term. Now, extra highlighting this one, short term, because that's going to happen on a daily towards maybe 12-hour chart, not even a 3-day chart. Because from that point, you're medium to long term and you're not watching these signals there. What you're observing there is really bullish. The market is slowly grinding to the upside. You broke higher. All those stuff still remains. So when you are in this market, you are now looking at like, okay, where the resistance are and how do these fall into that level. Because here comes your next resistance, right? You're going to travel onto that point. And if you are looking on a 3-day chart, you can also argue that you are observing a double bottom structure here, and that's now closing into the neckline. And as soon as that breaks higher, you see more momentum entering into the market. So one thing which we have to keep in mind is this. You can just come here, take a vertical line, try to put this here. Now, why am I doing this? This is to actually see the last peak here, which we put in, and the indicators. So you're coming into that price, you're going to look at the RSI, and then you're going all the way back down to the MACD. So now when you zoom in, you kind of see like, okay, the price is still here, way lower, but the RSI came up to that point. Okay, the strength is increasing. Now look at the momentum here. Same, if you are taking that and looking at this, okay, let's be a little bit more consistent. Put a clear line here. You are almost there. So that does show you that momentum is increasing, strength is building up, and most likely you may go test this one. Now that does mean you're going to have $3,000, $3,500 Ether. Fine. Now, is that all? No. Why is that? because by the time you reach 2700, 2800, this range is going to be a resistance. So if you are really going to test this range, that does mean you're breaking through this. Now what happens? This is your pattern. And in this pattern, you do have a chance to do a 200% or for a minimum of like 100%. Both of which, if you put into perspective, is a new highs, a new all-time high. So if you go for the normal one, you're still like above the last highs. That is bullish. But yes, you zoom in, you go to the 2-hour chart, 4-hour chart, and you see bearishness. Don't get into that trouble. Don't get into that trap. Understand the fundamentals and understand, yes, these guys are going completely bearish. But in that area of investments, you need to understand stock is a part of a company. If the company itself is going into that economical situation, then it can be worse. Now you need different signals. Next CPI is going to come in a month. And if the inflation is lower, I personally strongly believe that the market is going to continue higher. Now, that doesn't mean it's going to continue higher forever. It can be next 3 months, 3.5 months, and then a huge downside. No one knows when it's exactly going to turn up, but that is also going to come. Wave 2 is done, and once the wave 2 is done, you're going to see a huge correction. 70-80% drop is going to come. And in between, if you are in the market and trying to make sense of this and take some benefits as profits, you can definitely look at the Patreon where you kind of get these. Now, every day when I'm doing a video, I'm showing you one of these, right? That's in the market. It's not something we are making up. So if you want to take benefit of that, either you learn PA, put the time in, and try practicing. That gives you something. Yeah, it may take time, but eventually you'll reach a point where you can look at this and say, okay, that's an opportunity building up. So if you bought here, you already doubled your money. It's not that long time. 1.5 months is not that big. Fine. But 100% in a market like this is not bad. So guys, that's it for today. I'll meet you on the next video. Bye-bye.